Stocks are fluctuating near an 18-month high as we see a jump in weekly jobless claims. Will the recent market rally run out of steam? Mark Luschini is chief market strategist at Janney Montgomery Scott, which has more than 50 billion assets under management. He joins us now with his take on the markets. Mark, good to see you. We both said the same thing when we saw that about President Obama's income. Wow.
Impressive figures.
Pretty impressive. Speaking of impressive, last time the Dow was up at 14,000, October 2007. 14,164. What's it going to take to get back there?
Well, we've just, of course, passed a bit of a milestone, crossing through 11,000. The question is, will it continue to march higher? And I've certainly become more constructive on equities here. I mean, the data points continue to accumulate on the economic front that things are improving, from manufacturing to the services industry and even consumer spending, as we saw in the March retail sales figures here this week.
How significant was 11,000? Was it more of a psychological thing than anything else?
I think it's one of those things that the media tends to make more of than necessarily the market fundamentals would. But nonetheless, it's encouraging to see that directionally we're closing in on those highs that you had mentioned that were established back in 2007.
Also pretty impressive earnings. With the exception of Alcoa, the earnings have been pretty positive, right?
Absolutely. They've been very positive. In fact, surprisingly positive, given the fact that elevated expectations already existed relative to what earnings might look like here through the first quarter, and they're beating those nonetheless.
Talk to me about the environment right now. We're seeing moderate growth. Does that mean that at least for this quarter that we're seeing cheap money and bonds on the outside looking in?
I think it's the perfect cocktail for the stock market. You're seeing moderate economic growth, kind of not too hot, not too cold, and at the same time with albeit benign inflation characteristics, and no less than Ben Bernanke suggesting the same yesterday, we're seeing that we're not going to have any threat from any immediate hike in interest rates, which could compete with the stock market. And needless to say, investors are being chased out of cash as yields in money markets remain abysmal at these levels.
Did investors try to read between the lines of what Mr. Bernanke was saying?
I think so. I think you saw the market being up about 50 points prior to his speaking in front of Congress, immediately jump up and then close above triple digits as a result of that.
When's that extended period language going to disappear? That's all everybody talks about.
Well, I think we're probably likely going to see that sometime over the next couple of months, but that doesn't necessarily precipitate an immediate hike in interest rates to follow.
You are overweighting industrials and tech companies. Why?
That's true. Both of those industries offer high operating leverage. They've been very aggressive in cutting costs. And so any increase in revenues are going to drop right to the bottom line. In addition to that, both of those sectors, technology and industrials, are benefiting from the global reflation. And we think that's going to translate into profits, not only from foreign markets that are growing faster than the U.S., but as well increased activity here domestically.
What about consumer discretionaries?
That's a space that we're a little concerned about. You know, clearly we've seen a conventional recovery among consumer discretionary stocks, but they've been bid up to levels that we think leaves them vulnerable in case we don't continue to see growth in the economy sufficient to be able to bring the unemployed back to the workforce to continue to promote spending.
And Mark, quickly, you like healthcare companies, even after this bruising healthcare fight on Capitol Hill. Why?
We do. And in a word, valuations. They're as cheap as they've been in at least a couple of decades. And needless to say, not that everybody's going to be a winner from it, but as a result of healthcare legislation, healthcare space is going to now have 32 million more customers than they did before.
Mark Luschini, Chief Investment Strategist, Janney Montgomery Scott, joining us here on set. Pleasure to talk to you. Thanks so much. Well,